Chris, how you doing, sir?
Matt, good to see you again.
I am glad to hear it. I think we had a good session last week. Certainly, a few things we needed to get over and talk about with regards to markets. And I think for people that kind of like this sort of general learning, this week we're going to approach it a little bit differently and talk about some specific components of the uranium sector, which perhaps people don't get to see, certainly not from an insider like you. Why don't you sort of give us the headlines, what we're going to talk about, and maybe we'll get into a conversation around them.
Well, there's a lot of people watching uranium price of uranium move, and they're watching stocks like Cameco take off at various points, and I think it really, for people that are investing in uranium, I think they need to understand some of the differences in terms of what they're investing in. We're looking at, are the developers are reacting differently to the producers, which are reacting differently than the explorers, and they're all following to a large degree the price of uranium, and you can see the bumps and ups and downs on average fairly clearly. But if you're comfortable investing in a producer, that's one thing. But if you're investing in a developer, you're investing in a different value proposition. And if you're investing in an exploration company, it's different again. And I think people need to understand and it is difficult. We recognize it's difficult, to look at exploration companies in a particular space and understand how to evaluate them, how to value them, how to, what you're looking for, and what makes a difference, because it's tough. You're looking at a company that's looking for something to create something that wasn't there before.
But I think it's important for people watching, listening, reading about this show, that you could have an honest conversation with yourself about what type of investor you are and what type of risk profile you're happy with, and how much work you're prepared to put in. And that is going to inform, in terms of, let's say you had a portfolio approach to investing in uranium specifically, it would inform the shape and makeup of that portfolio between producers, developers, and explorers. Right. So, yeah. And also, I guess a few things like, it depends how much money you're deploying. If you're deploying a lot, you need to feel you can get in and out of that thing. If it's just a few shekels here and there, maybe not such a big problem for you. So I think that the basic fundamentals don't necessarily change because it's uranium, per se, on that basis. But I think we are going to talk today about maybe some of the things you need to be aware of if you are investing in uranium, which are specific to the space as well. But that's my 2 pennies worth.
Well, and you see, I mean, when you're dealing with a producer, you're dealing with a well-known asset. The thing has been evaluated and quantified every which way from Sunday, and you're essentially dealing with a manufacturer, and the primary driver of value going up and down tends to be the commodity price, followed by how well they're running the plant, followed by how well are they avoiding a disaster of some sort. So that's your producer model. But if you're looking at a developer, you're looking at somebody who's de-risking a project, and you can look at the share price movements and the value of these developers. And when you look at what the market considers, say, to be a near-term producer like a Denison or a NextGen or an Encore that's actually jumped the curve, you see them trading more like a producer, whereas assets that are having trouble de-risking, like our folks over in Niger say, you see them at the other end of the curve. But it really, the stuff really does follow the Lassonde curve or the value curve of a mine or whatever you want to see. People need to understand where they are in that and what their expectations are, because in terms of an explorer, like I say, it's all about discovery. And what is discovery, and when do you start paying attention to that? Because I'd say over the last 20 years, I've said this before, we've seen six new deposits found and turned into a resource, and the value proposition there was finding something, and all of them on average had 1,000% increase over the first 6 months after discovery. So, that's the value proposition in an explorer. So it's very different.
Right. And well, why don't we take a look at 2 companies? Okay. Why don't we take a look at Canalaska and F3? Okay. They've both had success at various points.
Yep.
And they're both getting valued in a similar way in terms of quantum, but perhaps you might be worth kind of giving a sort of background to each of those companies for new people listening in, and then we'll kind of
Sure.
take it from there. Yeah.
Well, F3 back in 2022 actually has what we like to call a discovery. It hasn't been defined as a resource yet, but they made a very good find, and they've been following it up with a lot of drilling, and they're establishing it into a resource by the looks of it. And they must be, because they've since, they're working on spinning out all of their other exploration assets into something else. So though
F4.
F4, and I know you had Sam on last week, and
Yeah.
they're looking at this stuff in detail, and it looks like it's moving along very well. But if you look at their change in share price, this red line, this is the spot price of uranium, and the percentage change since the beginning of January 2023. Okay. And against that, this is the percentage change in share price of the 5 North American traded uranium producers. So obviously, they are moving in tandem somewhat with the price of uranium, and to the point where you can see every bump up and down being replicated in the change in the share price. These are your developers, and so as we would expect, they're tracking lower than the producers. But if I were to break this apart, you would see that, like I said, the next gens, the Encores, the Denisons would be trading up higher, more towards the producers, whereas others, who are having trouble de-risking their projects would be significantly lower. But again, you can see on average, every bump in the price is somewhat reflected in the average share price. And then these are your explorers. Heading in the other direction. Again, the graph looks the same. It's just pointed in the wrong direction. And we can talk about that and why that happens. So can you see my cursor here in the middle?
Certainly can.
Can you see a cursor in the middle of the screen here?
Yes.
Okay.
All
So
good.
if you were to look at F3, now they made their first, I guess, discovery, if you will, back in 2022. Prior to this, if I were to map theirs, their graph here, you'd see that they're somewhat flat. They've not been moving up in the way that a developer or somebody else would what you would expect from the price of uranium. So here they are, actually, obviously putting together a resource of some sort, and yet they're not moving with the price of uranium. Makes you wonder what's going on. If you look at Canalaska, last year, again, they hit a very good result in terms of grade, in terms of width, and they've gone back and hit that hole 2 or 3 times, or that area of mineralization 2 or 3 times. So they, of course, had a bit of a spike in their share price at that point, but they've actually been reacting more positively through the last year and a half than F3, and so you have to kind of wonder what investors are looking at as they look at these two stocks, if that makes sense.
Yeah, but okay. So
And I think it comes down to the confusion of exploration and what are people looking for.
Right. So there we go.
Right. And that's the problem, because it is hard. And, we've talked about, what's a discovery hole? Well, as far as I'm concerned, there's been 6 discovery holes in the last 20 years, although we all talk about discovery. And the reason that we have to use words like that when we find something positive is because it's very difficult to convey to the investing public the importance of what you just found as an explorer, right? When you find something, that's the end of the process. For the most part, it's the end of a very lengthy and expensive process. So along that way, how do you actually convey, unless they understand what you're doing during that period of time, how do you convey that? And yeah, it's with probably overly promotional words and adjectives and things like that quite frankly only lends to confuse people at the end of the day, because you're creating assumptions and things that don't necessarily hold.
It's kind of weird to me that happens, in the sense that, okay, exploration is about making a discovery, right? And then you'll add the word economic discovery, to that. That's the process you got to get through. So, I think I say you've referenced, you and I've talked in the past about how do you define discovery. I think some are a little bit more relaxed with the terminology and mineralization when it comes to defining that, and others who do genuinely make a discovery but then can't follow it up with more or scale, another discovery or scale. That's when people kind of lose interest, because it ultimately does. The economics matter, right? You got it. Well done you
Oh,
for finding
absolutely.
a discovery.
Right.
Well done you. But that's not it. The game gets harder at that point, actually, if you are to truly de-risk something to make it a potential candidate for it to be a financial success. And that's where I think a lot of the kind of this drop off of capability, drop off of interest, continued pulverizing and devaluing of the stock by raising capital. People get a bit tired. They get more interested in the next new shiny object. So it's really hard. Exploration is really, really hard.
Well, it takes a lot of information and a lot of data and a lot of input, right? I mean, these things aren't found by accident. And as much as we like to talk about the ore grade in the basin, over the last 6 decades, there's been 38 deposits found. That's a lot of deposits. It's one every year and a half. And we continue to find them. So it's not just that the ore grade is high in this particular area. The area is just so blinking prolific because there's more and more and more to find. And that's the difference. But the only reason you find it is by having a lot of information. I mean, I can tie together for you the discovery of Rough Rider with F3's discovery. Right? There is a chain of connection between all of those, and it all has to do with the addition of more and more information. Well, here I'll go. When it was Standard Oil, actually, the oil companies were all in the basin early on in the 80s. They were the first ones looking for uranium, and they drilled the heck out of an area called Midwest Lake. Drilled it all over the place looking for things. That was in the 80s. Well, 20 years later, when Hathor comes along, they're layering additional newer technology over the area. They're primarily, in that case, it was seismic, and they wandered right into this mess of drill holes and hit Rough Rider. Now, Rough Rider was on a project that was very, very small, and the project was right at the claim line. And next door was a great big project that was owned by a company that was actually in joint venture with the Koreans. So while they're looking all over this project, they see this happen near the claim line. They move, of course, all of their energy and focus over to there because they've just learned something new. We learned a lot of things out of Rough Rider, and that was fission exploration. And they found the J zone right there, and they was called the J zone because they'd already explored A, B, C, D, E, F, G, H, and I. So now they've gotten to J. So a lot of work, but they understood the area and they understood what they were looking for. That project, after Rough Rider was bought by Rio Tinto is now, Denison is looking to shine themselves up to be sold to Rio Tinto. So they buy the J zone from Fission. Now Fission's got a whole bucket of cash. They just now monetized this asset, and they're looking all over the place for a few more years with all these other assets they've got. And through a JV with Alpha, they identify the Arrow, not the Arrow, the Triple R deposit. And they start moving it along. Meanwhile, a company called NextGen, who's focused on the eastern side of the basin on a project called Radio, has bought this great big land package from Mega Uranium just to fill a map, quite frankly, because their project was so small. And all of a sudden, Fission's lit up something over in the west. So NextGen drags all of their stuff over there, and they start, and lo and behold, here comes comes Arrow. NextGen spins off a company called ISO Energy and starts funding the heck out of it. So they can do all the exploration it needs to do for many years before they find the hurricane on a project they bought from Cameco. Fission, meanwhile, spins off Fission 3.0 and funds the heck out of it for years because they've got the money to do so. So it's and lo and behold, they've now found something again as well. So it's the data, the information, it's building on what other people have found. It's building with information that you're creating yourself and having the capital to do it that finds these things. But they're very findable, as I point out. We're finding them every year and a half. So they're out there. It just takes a lot of time, energy, and money to actually lay hands on it.
It's a, well, you can sort of see why maybe retail investors get a little bit nervous, because not everyone finds it. I think cumulatively, the total sum of the money finds something, which gives us all hope.
Yes.
Sometimes false hope, but nevertheless,
we learn
it.
from each other, and that's what you have to be able to spot. Who's got the right land package, or enough of a package in the right areas? Who's going at it properly? Who's spending money properly? But it's all this money and build up and information that needs to be.
But there's the thing. Let me ask you about that. Spending money properly, right? Are there going to be teams that are better at finding stuff than others because they do things the right way, or broadly, it's just a numbers game because it's a massive land package and it's about getting out there and actually doing the work on the ground?
Well, like I said, these things aren't found by accident. This is not throwing darts at something, and absolutely there is, because and it comes down to the drilling, right? Everybody gets excited about drilling. Investors get focused on drilling. Are you drilling? And when you do drill, did you hit a zinger? And if not, I got to go. When in fact, one drill hole can cost more than a geophysical program on a whole property. Right. So it's all about really focusing down and taking all that information and really, really well defining your drill targets. So you've got surface sampling going on across this. There's research, just understanding all the assessment work and all the research of all the work that's been done around you, taking the work you've done historically and compiling all of that and understanding it. And then you layer on more work and surveys, but they might be airborne geophysical surveys or surface geophysical surveys or sampling or what have you, to really, really narrow down the what you're looking at, and then you drill. So yeah, if somebody's rushing out with a drill, and the first time you've heard about them, they're doing a 10,000 meter drill program over here, there, and everywhere. They're out there prospecting with a drill. But you also don't want to avoid the people that are, they're flying airplanes around, and how boring is that? Because it's like if you got a great big long bolt and you're watching somebody unscrew the nut and he nearly gets to the top and you go, well, that's taking you too long. I'm going to go, maybe Ed can do it better. And he starts at the bottom again. You're looking for the ones that have, because once you're drilling, and even the first pass drilling, our expectations are really just so we can understand what the area we're in. Once you're past that, every drill hole could be the drill hole. Like once you're truly into drilling, after you have done all the work and all the research and as many versions of geophysics you can do, that's going to give you an understanding of this stuff. After that, every drill hole could, be the one.
Okay, we're making discovery every 18 months. A lot of money's going in the ground, but the payback is good. The payback isn't shared around equally, so we're looking for the right teams doing things the right way. So let me come back to that conversation we had earlier, which was about how do you define what a deposit looks like, what a discovery looks like. So what are these typical deposits look like as far as you're concerned?
Okay, well, now I'm gonna give you another picture.
Oh, good. Takes 1,000 words,
Hang on a second. So what is about to appear, this is your typical deposit, okay, in the basin. We're talking the basin.
Okay.
And one thing I'll point out is that this picture back in 2005 to 2008 kind of stopped just above the word basement, right? Nobody knew these things actually could be deeper. And it was that recent. That we've really started looking that much deeper. But essentially, the pieces you're looking for are this. We've got some surface cover, some overburden. You've got this sandstone. And historically, all of these deposits sit at what's the unconformity, where it meets that basement rock. What we're looking for is structure, so someplace where this deposit could form. And we're looking for alteration. So when this mineralization event occurred, when the hot fluids were running through the area, they were actually chemically changing the rock and turning it into something different. All right. So we're looking for structure. We're looking for alteration. Those are the big hits. And to show you what that would look like in real life, so this is the Sioux Sea mine, if I can see that, if you can see that.
Yeah, yeah,
So this is
absolutely.
after it was mined out. Okay, there's 30 million pounds of uranium. So this channel, if you will, up the top, that's altered rock. This yellow line you see here, that's your unconformity. You can see it jumps there because there's a faulting system that ran through there, and this is your ore zone. So that's kind of what it looks like. There we go. So here's one. So let's talk about, this is the one I brought. Let's talk about Hurricane. Okay. So here's Hurricane, which was bought by ISO Energy from Cameco. And so one says, well, what's wrong with Cameco that they didn't find it? Well, I'll tell you, because they sold it because they were done exploring it, right? They said, okay, well, we don't believe there's anything here. So here's Hurricane side view. And what's unique about it, what's weird if you will, this light gray area, that's graphite in the basement rock. Again, that's one of the things we're looking for because they're always associated with graphite. But these dotted lines are the structure, and there's no mineralization in the structure. As a matter of fact, the structure doesn't appear to have anything to do with it. Here's another thing. What you're looking at is about 50 meters wide. That's half the size of a football field. And if you go over to this side here, this drill hole here hit 6.5 meters of 37%. 5 meters away, they hit 7 meters of 0.8%. Like it dies immediately. Same thing on the other side. So this is odd, and so they found something in a way that we wouldn't necessarily have been looking for it. In the same way. And the alteration was very, very tight to the deposit. It just looks different than the deposits we've seen before. And when we're looking for uranium, all we can do is chase the clues that we know are possibly there. Now, this trend that where Hurricane is runs across our property just on the eastern side, and across an area that we hadn't drilled till recently. So when we look at this picture, all of a sudden we can go back to all the data we've collected over time and look at it differently. There's some odd things about this. It's sitting on a bit of a dot of a mag high. There's other things about it that are unique to this particular deposit that we can now use that understanding and learning mirrored with all of our own information. And you come up with a different model, and this is what has to keep changing and changing over time. Is your models.
I wonder, the guy at Cameco who said, "I think we're done here." I wonder how he's feeling now.
He's working for no. He's where he is now. No,
Right.
we know. No, actually, I know where he is, and he's doing very well. And it's not necessarily just on them. You can look at that and see why they didn't find it and why they stopped looking. Because if it doesn't fit a model or a conventional model, then then it's a Hail Mary. You're sticking a hole into something that based on everything we've ever seen doesn't necessarily hold true. And here it does. Now, that in this particular case, of course, again, Hurricane's sitting right at the claim line, seems to be an ailment of the basin, and Cameco and Urano are on the other side drilling like mad, and it looks like this is going to be something quite significant at the end of the day.
I hope AI can and new technologies can come along and kind of help us kind of process this data quickly. As you say, the data is important, but when you're relying on individuals to kind of get through a lot of data, sometimes you don't make the right calls. Talk to me about another example from days gone by, Standard Oil and Midwest.
I've got the picture for that, but that was the one I described earlier because a lot of drilling has been done. So when when you're staking a property, when you're looking at a property initially, there is a lot of data available, historic data available, because that's what we submit to the province as our rent for the to hold on to the property. So you've typically got a starting point, and it's from that starting point you have to keep layering more and more data on top of it that you pay for, more current data.
But it kind of feel, I guess my point here is like with Hathor, stumbling across it 20 odd years later, it feels like it's a very inefficient process in many ways. You talk about lots of data points, and the data points are getting better, and the
Yeah.
interpretation of the data is getting better. And there's a lot of historic data out there which would probably mislead. I suspect. It's wonder if we found anything, quite frankly, isn't it?
Okay. Well, here I'll show you another one then. You'll like this one. This is one of my favorites. Okay, so this is interesting because this was Arano, and this is the McLean Lake. So these three lines you're looking at, these would be three lines of geophysics, EM geophysics, and what we're looking for is the graphite in the basement rock, which is very conductive, and so we can identify where it might be down there. So they run these three lines, and from that they find these conductive areas where the blue line there is crossing the lines. They say, okay, this must be a conductor that's running in this direction. So they drill a hole on the conductor, and they come back with 0.134% over 6.5 meters. That's a great hole. Like, hopefully we're getting close to something. So from that, and this is 1974, from that they develop what are they going to do next? Another plan. So they plot out 4 holes around this hole, 15 meters away. And then they also plot out a hole on each of these other lines that they did where they know that they hit conductivity. That's 130 meters away. So this was their next shot. So hole number 9, like again, they're looking at a whole big area, not just this one. So hole number 9, they only come up with 0.03% over a couple of meters. Out on the other conductors, they're hitting 5 ppm, hole 13, hole 15. So then they drill another hole to the north here. This is hole 26 now we're up to, 0.09% over 0.3%. So they okay, this ain't working out for us. And what you're looking at here is probably, just in this area alone, is in today's dollars is probably about $3 million worth of work. So they kind of left this alone for a while, and they went off and explored around it and all over the place. And as they found more and more information around uranium in the area, they found that the McLean deposit was coming up in pods, these little pods, and they were better understanding, how this stuff was being deposited. They came back 10 years later and said, okay, we're going to drill. And they drilled hole 53. And they come up with 7.5% over 10 meters. So here's the aha. This is what the deposit ultimately looked like. They had they drilled either of these other holes that they'd planned, they would have hit the deposit. But it's because of the understanding, the more data that they got around it and the other work that they did, and the better understanding they had for the area, that allowed them to go back and lo and behold, here's this deposit. That again, because of the odd shape of the thing, it was kind of bobbing and weaving behind it. So when you're asking about how can Rough Rider find a deposit amongst all the holes that Standard Oil drilled, this is the kind of thing. But it's very doable. You just need to understand, learn more. It's the learning over time, and it's the it's the other technologies and aspects that you add to it to get you there.
Yeah, but do you know what? It's kind of, sometimes it's incumbent on the companies to do better at articulating what's gone on. Because, you think about all of that data, you think about the decision making, the anguish over where do we put, especially, it's money's tight, cash constrained, it's expensive,
Mm-hmm.
however you want to view it. You got to spend your money efficiently, right? And you say, right, I'm going to go in this hole. And I love your story earlier about, it's called the J zone because A, B, C, D up to J basically miss. And people need to remember that, and we've had that in the oil and gas game where, it's been many, many holes, later that we kind of hit the hell out of the thing. Where if you've got to spend your money efficiently, you come up with a duster. You've got to explain to your shareholders what's happened, what you've learned about not just what you've found, but also what you've not found. And I don't think companies do a very good job of
No.
that. I really don't
Right.
think they do a very good job of it. But here's the thing: what is the process that you guys go through when you're trying to prioritize an exploration package that you're going to fund this season, or how do
Well,
you go about that?
and to your first point, it's hard to keep people's attention, right? Everybody's looking for drilling. Everybody's and it's hard to say in one soundbite, to understand why this wasn't a failure, right? Because that's what people tend to walk away. That's where I get all my my nasty hate email and funny phone calls, is because you put out information, and if it's not the zinger, then it was a failure. Well, that's not true, because you just don't understand what we learned. We get very excited about stuff. You talk about technical success. And we have been we as a group, as an industry, or as a group of explorers, have been very bad at it because we're catering to that lack of attention, right? So for all those people that barely get past the headline, so we've got to put as much in those first few sentences as we can to get people as excited as we are, who haven't got the time to really dig in and see what we're up to. So we're really trying to do more of that, and it's almost a dangerous game. And I think that's it. That it's the fear that if I put this out, I'm going to get slammed. Therefore, I'm not going to put it out that way and make that kind of information available. I mean, we do now. I can say this a little more comfortably because we've been at it for so long. We've got so much information. I mean, we're at that stage where, the next hole could be the one we've been looking for, because we've got all that work done before us. But that doesn't stop us from having to go back in and keep the pipe full, right? We did a lot of geophysics this year that we talk about, and we get crazy comments back. But you go to these to a company's website, and it's hard to find that kind of information. I mean, not to blow my own horn here for a second, but we started doing this last year. We got a whole novel that you get on our website that details every one of our projects and all the work we've done on it. And it gets downloaded a lot. But I think people are afraid. Exploration companies can be concerned about putting out that kind of information, because it's hard to put it out in a way that doesn't appear that you're what's wrong with you? You can't find anything. And so they're
Yeah, but it's a kind of fair point, isn't it? Because it's like that's the first go. You don't go for your 10th best asset, 10th best exploration target. You prioritize these targets, and people expect you to kind of hit it out of the park every single time, right? And if you start with your best one, what's that do? What's that say about everything that comes after that? Right?
Well, yeah, but I mean, again, you've learned more and more. Well, here we are moving. See, so right now we're focused on our Turner Lake property. Why? Because we're sitting right next door to Hurricane, the world's highest grade project out there, and we've got a ton of geophysics on Turner Lake. But it wasn't a priority until we started seeing how that came across. And we've picked up a lot of other data that the Cameco did before they dropped that property. And now we're drilling. And I think what we will do in our next disclosure, I hope, is what you're talking about, which is show how all this stuff comes together and why we get excited about it, right? Why we think this is very exciting. But we have to be able to compile and present that information in a way that people can grasp it and really understand it.
Okay, then help me understand this. Then how do you? Okay, I'll ask a question a slightly different way. How do you go about evaluating and prioritizing exploration projects?
You layer up all of this information. And I can get it. We did something a while back. We've never shared this with anybody. It was 10 years ago, and we worked with a fellow by the name of Dr. Hodgson, who was the economic geologist professor at Queen's University here, and went on to work at Barrick. And what he was there to do, as their head of exploration, was to evaluate all of these projects. They had gold projects, exploration projects all over the world. And the problem is you can't put a dollar assignment to any of this stuff, but you can evaluate them against each other. if you know what the criteria are. And he built for us a model for the basin that allowed us to look at one project versus another project. And I can walk you through this maybe at a different time, but what it allowed us to do was at three levels evaluate a project. One was on a district scale basis, where we look at the entire basin and we evaluate projects based on 5 or 6 criteria, and we were able to actually score them. And then you're looking at a project basis, where you're evaluating it based on the nearness to other good things and geophysics that you've got and things that you know. And then the third area, when you get right down to the target level, you pretty much have to have some drilling done before you can start getting scores on that thing. But again, there's a myriad of things that we're looking at and scoring in a variety of ways. And essentially, I mean, if you really want to boil it down, it's just how close are you to a known deposit or mineralization or on trend with. It's, do you have known graphite? Do you have known structure? Do you have known alteration? Kind of those things I showed you before. And from those aspects, you can start prioritizing. I mean, it's far more complicated than that. There's far more levels of understanding. You've got boron in the area, you've got other things as well. But there is, a myriad of indicators that you can line up and literally score if you want to. That's going to take you somewhere. For last year, we were very focused on red willow because we were hitting mineralization. I mean, there's no better indicator for uranium than uranium. So we were hitting that mineralization. The more we drilled, the more we understood why it was there and not somewhere else. And at some point, that particular target said, okay, we got to walk away from that. That's enough. And we got to see what else we can focus on.
Enough being what? Enough it's not an economic success, or
we don't believe that we're going to find an economic deposit if we drill anymore, or the odds of it are lower than if we now go over. We got someplace else we should be looking, because we've got other targets we just haven't drilled yet, even first pass drilling. You got to poke a hole in it.
So drill to kill.
Sorry?
Drill to kill, right? Drill to kill. Okay.
Yeah.
No problem with that. No problem with that. Because there's nothing worse than people that come back and talk to me about technical success, or we hit mineralization and they know.
Well, that's all fine. I mean, that's all very positive stuff.
Is it?
But don't spend $20-30 million proving something's not there.
Yeah. That's what I'm talking about. That's exactly what I'm talking about, actually.
And it's kind of brave to walk away from this stuff too, right? I mean, to kill something and walk away. That's why, again, anybody that's found anything has got a fairly extensive portfolio, right? They're not just working one. You've got to have a bit of a pipeline of things, because you're also learning from those. And but you got to knock them off as cheaply and quickly as you can.
Can we just talk a little bit about market more broadly at the moment? Obviously, we're still in this kind of poor space. We talked about it last week, and I think people are kind of waiting for, I don't know, Kazatomprom numbers to be revealed, forecasts to be revealed. They're waiting for, I don't know, the US election. Whatever the thing that's being blamed, attributed with the next move in the space is. Mm-hmm. Demand, we're in violent agreement. Demand's there. We're also in violent agreement that there's not a lot of producers, quite frankly, to kind of deliver against that demand, right? So we'll take that as read. But if I'm looking from outside into this uranium space that you and I occupy at the moment, and I've never invested in a uranium company. And we've gone full circle here, as far as I'm concerned anyway. We're just going to, how do I kind of construct myself a portfolio? We're going to argue the case that producers will follow the movement in I guess, price of uranium, developers less so, but equally positive. And then you said to me, okay, look at explorers. It sort of follows the same patterns, but heading the wrong direction, heading south. And you said that, I guess there's a discussion around that. So in terms of your view around explorers, kind of that pattern of that chart we showed at the beginning, why do you think that is? Why are the explorers? Is it because you put it as a basket of cases? There's going to be some good ones in there, some not so good ones in there?
I think explorers are heading in that trajectory for a couple of reasons. One is because because the price of uranium is so strong and the fundamentals are so strong, we've been able to raise money. So I think you're also looking at dilution there. I think if you remove the dilution aspect from the share price change, you'd find that they would be probably more leveled out than it appears to be. Beyond that, I think it's there's other things to invest in. I mean, it depends on how you want to play it. To your point, I think if you believe in the fundamentals and you want to go at it in a very easy way, you're gonna invest in an ETF. You're gonna throw something at Sprott. You're gonna invest in some Cameco, and not have to think about it too hard. But some of these developers who are now getting what happens when Denison puts something into production. What happens to that stock price if you think it's going? Because it's all being accentuated by the stock price. So when you find, so in the explorer space, you find a discovery, if you can call it a discovery, when you actually tap into something like an F3 has, you're going to get a bigger boost, right? Because not only have you just found something new and it has potential to be significant, but the value of it from a uranium price perspective has got an upward trajectory, and it's going to take you even further. So I think from an exploration stage, you're looking at an accentuated jump in value when something is found.
Right, but this chart of yours, which we'll keep up here for a bit, it shows, if I'm again looking in it, I think, why on earth would I invest in an explorer? The lifeblood of the industry, the explorer.
You shouldn't. You shouldn't unless you're spending a bit extra time to understand what you're looking at.
Okay.
I mean, you're dealing with. Are you investing in a company that has a bigger portfolio, that they're not just reliant on one flagship project or what have you? Are you looking at a project that has the expertise, the people in it, that are able to build a story because they've seen so many different aspects of this stuff? And it's not just that they've been with one company for 20 years. I mean, there's a lot of talent moving around from company to company, and are they dealing with projects that have legitimate a legitimate likelihood to really find something? There's a lot of new theories. The outside of the basin has now been staked all over the place with people with new theories of this, that, and everything. That's fine. And there may well be a lot of uranium out there, but man, you're really rolling the dice now, because you're focusing on a new theory as opposed to following up on a known theory or a known aspect. So, are they in the right neighborhood? Have they got a proper story behind why they think this project has the value that and the odds of finding something, or is it just because they're in the basin? Well, you have to spend a little more time digging in.
Yeah, so we're kind of Athabasca focus here primarily today, but again, so looking a little bit further, a little bit wider. Niger, that story runs and runs. I think we're seeing Global had to put out their raise by at the moment another month. Potentially, because the banks maybe just need a bit more time to evaluate, right? I think that's it's like no one quite knows what's going on. The company's not saying much, but it kind of feels like they're on the ground. They're doing the development of the project on the ground. They're actually doing the work. GoVX, I think, is in another camp indeed, where perhaps they've not felt easy to come by the money to be able to do anything, even if they were ready to. So they're under a lot of pressure, but they're being, I guess, thrown into the same basket, which is Niger is a bit of a mess, and it's kind of getting a little bit full of Russians and Chinese, etc. So yeah, I kind of feel something for those guys that through no fault of their own. It's a good place to do business if it was under normal circumstances.
You're talking about standard variables that you look at in any resource company.
Yeah.
That's your geopolitical risk and
it is. But again, coming back to this, if I'm a virgin coming into the uranium space, I'm going, well, Niger's a little bit crazy. I don't feel I can stomach the kind of political risk there. I'm looking at the usual debate between African play versus North American play. The Athabasca, it's just going to take a little bit longer for some of these projects to get over the line, get into
Yeah.
production. You've got the US plays, which are kind of small but perfectly formed, and I think that's with a few exceptions. I guess there's the encores, and energy fields of this world. Lots of sort of bitty companies there. You've got the Namibian play, which was seemingly having an easier time of it at the moment. Malawi as well. It's a very sort of confused space for such a small universe. For investors, and you can sort of see
It shouldn't be this hard.
it shouldn't be this hard, right? But it's probably the most politically charged, geopolitically charged metal that people could invest in.
Yeah.
I can sort of see why people might think to look elsewhere. But at the same time, it just kind of feels it's kind of a coiled spring ready to go. When
Well, you look at
things
the
go.
U.S. I mean, the U.S. assets are interesting, right? Because you've got, I mean, a company making deposit in the States is 10 million pounds at
I know.
0.1,
Wow.
0.15%.
Wow.
Right? And so the projects and the companies that are expanding on projects down there, now they're dealing with better known assets, right? In the basin, we are, looking for something that nobody knows is there yet. I think in the States, they're now, and rightly so, they're leveraging off of known historic assets. And because the U.S. is so highly supportive of finding anything domestically, you're not going to run into any political issues. And so there's a lot of opportunity for consolidation, I think, in the States. And anything anybody's producing in the States is going to get lapped up immediately. So again, you're following the price there. But again, it's a different analysis of the market and of the industry than if you're looking in the basin or if you're looking in Australia. It's more complicated than one would hope it would have to be.
It's very complicated. Even I'm struggling, and I've been at this a while. Well, look, I think let's kind of wrap it up there, because I think there's some fantastic data points. Well, the whole conversation is about data today. Some great examples from you as well. So appreciate your time. And this is really for an audience perhaps maybe coming into this new and afresh and wondering how they can get involved. At least we're kind of pointing some of the things they should be looking at and for. I don't think it's too late. I think there's a long ways to go in this one. It's slow and steady, but you know what? I kind of like it like that.
Yeah, it's got guardrails right now that a lot of other commodities don't. So you can play a bit and learn a bit
along the way. And by the way, and I think that we've got a kind of great response to last week's session. If anyone's got any questions or any topics or things that they want to talk about, apart from abusing both of us, I got a death threat last week. I haven't had one of those for a while. Not from our interview. You'd be glad to hear it. But I did think, crikey, people do the strangest things, don't they?
Yeah, I mean, to your point, if people have questions, things they'd like to hear more about.
Actual questions. Sensible things.
Not grievances. Not grievances, but we do have answers for pretty much everything.
Yeah.
Even if it's a grievance.
Yep. Well, Chris, thanks very much. Do appreciate it. We're probably not going to see you next week, so it'll be in a couple of weeks after that. So we've got time to get after us, and look forward to hearing from you all. Thank you very much.
Good. Thank you. Talk to you soon.